An economic collapse is a very real possibility. In fact, many experts believe that it is not a matter of if, but when. The stock market is also at risk of crashing, which could cause even more financial turmoil. If you are not prepared for an economic collapse, it could mean disaster for you and your family. In this video, we'll cover 10 things you can do to get ready for an economic collapse and stock market crash. We'll discuss everything from diversifying your investments to building up an emergency fund. So if you're worried about the future of the economy, make sure to watch this video. Before we begin, if you haven't subscribed yet, please subscribe to our channel and hit the bell icon to get notified of our new videos. 1. Maximize your liquid savings. No one knows when the next economic recession will hit or how severe it will be. However, there are steps you can take now to prepare for the possibility of an impending economic collapse and stock market crash. Cash accounts such as checking, savings, and money market accounts, as well as short-term government investments, will be your best bet in a crisis. Don't invest in stocks or other higher-risk investments until you have several months' worth of cash in liquid accounts. How much cash you need to have saved up depends on your financial obligations and risk tolerance. If you have a major obligation, such as a mortgage or a child's ongoing tuition payments, you might want to have more months' worth of expenses saved up than if you're single and renting an apartment. A 3-month expense cushion is considered a bare minimum, but some folks like to keep 6 months, or even up to 2 years' worth of expenses in liquid savings to guard against a long bout of unemployment. 2. Move away from the big cities. Ready to move away from the big cities is one of the most important things you can do, is to move away from the big cities. While this may not be possible for everyone, it's still a good idea if you can do it. The reason for this is that the big cities are likely to be the hardest hit by an economic collapse. There will be more crime and violence, and it will be harder to find food and other supplies. If you can, moving to a more rural area will put you in a better position to weather the storm. 3. Diversify. When it comes to protecting your retirement savings from the imminent economic collapse and stock market crash, diversification is key. By investing in a variety of assets, you can minimize your risk and maximize your chances of weathering the storm. Stocks, bonds, cash, real estate, derivatives, cash value life insurance, annuities, and precious metals are all great options for diversifying your portfolio. And depending on your age and risk tolerance, you may want to allocate a larger portion of your savings to safer investments. If you see a market crisis on the horizon, don't be afraid to act quickly and move some of your money into safer territory. By doing so, you'll be better prepared to weather the storm and protect your hard-earned retirement savings. 4. Gold and silver. The stock market will crash, inflation will skyrocket, and the US dollar will lose its value. But there's a way to avoid all of this, and that's by investing in gold and silver. You see, central banks are recklessly printing money, which everyone knows will end badly. Inflation will go up, and the US dollar will lose its value. But gold and silver will increase in value. In fact, gold is already up 20% this year, and silver is up 30%. And there's a push in more than a dozen US states to allow gold and silver coins to be used as legal tender. So, not only will their prices continue to go up, but you'll also be able to use them as money. Investing in gold and silver is the best way to protect yourself from the coming economic collapse. Don't wait until it's too late. Invest now while prices are still low. 5. Make a budget. Creating a budget will help you to see where your money is going and where you can cut back. This is especially important if you lose your job or have a decrease in income. There are a number of different ways to create a budget. You can use a budgeting app, create a spreadsheet, or even use a pen and paper. Whichever method you choose, make sure that you stick to it. Once you have your budget created, make sure that you stick to it. This can be difficult, especially if you're used to spending a certain way. However, it's important to remember that a budget is only effective if you stick to it. If you're not sure where to start, there are a number of resources available to help you. You can find budget templates online or in financial books. If you're worried about the economy or a possible stock market crash, creating a budget is a good place to start. By doing this, you'll be in a better position to weather any economic storms that come your way. 6. Warm clothing and hiking gear, especially good footwear. If you plan to survive a long-term economic collapse, you need to make sure you have the right clothing and gear. This includes functional and warm clothing, as well as good footwear. In a cold climate, you'll need to store up plenty of blankets and cold weather clothes. If it rains a lot in your area, you'll need to have rain gear. If you think you may have to survive outdoors, make sure you have something warm to put on your head. Wool sweaters are a great option for keeping you warm in sub-zero weather. You can find them at thrift stores or military surplus stores. Don't forget to have the right clothing and gear for your family too. With the right preparation, you can make sure you all survive a long-term economic collapse. 7. Prepare to minimize your monthly bills. As the economy continues to crumble and the stock market teeters on the brink of collapse, many Americans are wondering what they can do to prepare for the worst. One of the most important things you can do is to reduce your monthly expenses as much as possible. This will give you more flexibility in your budget and make it easier to weather a period of reduced income. Start by looking at your budget and identifying areas where you can cut back, such as by switching to a free checking account or canceling unnecessary insurance. You should also make sure to have an emergency fund in place to cover unexpected expenses. In addition to reducing your expenses, you should also take steps to boost your income. If you have extra money coming in each month, you'll be in a better position to weather a financial crisis. One way to do this is to sell unwanted items or start a side business. You can also look for ways to increase your income at your current job, such as by asking for a raise or taking on additional responsibilities. 8. Find the silver tax lining. If you're worried about a potential market collapse, there are still ways to protect your investments. One option is tax loss harvesting, which allows you to sell your losing positions and buy them back at least 31 days later. This allows you to claim the loss under taxes and offset any gains you may have realized in other investments. You can also carry forward any excess losses to future years and write off up to $3,000 of losses each year against your ordinary income. By taking these precautions, you can help minimize the impact of a market collapse on your investment portfolio. 9. Hedge your bets. If you think a market downturn is coming, there are ways to profit from it. One way is to sell stock short and buy it back when the chart patterns show it's likely near the bottom. This is easier to do when you already own the stock you're going to short. That way, if the market moves against you, you can simply deliver your shares to the broker and pay the difference in price in cash. Another alternative is to buy put options on any stocks that you own that have options, or on one or more of the financial indices. These derivatives will increase enormously in value if the price of the underlying security or benchmark drops in value. Of course, there's always the possibility that the market may not fall as much as you expect, or it may not fall at all. So you need to be comfortable with the risks you're taking. But if you're convinced a market downturn is coming, these are some ways to profit from it. 10. Plan for the worst. The worst thing that could happen in a recession is that you could lose your job. This would mean not only losing your income, but also potentially having to draw down your savings to make ends meet. Unemployment is unfortunately a hallmark of a recession, so it is important to be prepared financially in case you are laid off. It is a good idea to take stock of your finances and see how well you would be able to cope if you lost your job. This includes considering your expenditure and whether you could cut back on any non-essential items. It is also a good idea to pay off any debts, particularly high-interest debts such as credit cards. This will free up some cash flow and give you a larger credit limit to use in case of an emergency. No one knows exactly what the future holds, but by taking steps to reduce your expenses and boost your income, you can better prepare for an economic collapse. By taking these measures now, you can help safeguard your finances and protect your family in the event of a severe economic downturn. That's all for today. If you like this video, please give it a thumbs up. And if you want to hear more videos from our channel, subscribe and make sure to turn on the bell icon.